If you're a freelancer paying thousands in taxes every year, there's a retirement account that could cut your tax bill by 20,000 or more. And most freelancers have never heard of it. In the next minutes, I'm going to show you exactly how this account works, run the real numbers, and walk you through a simple calculator so you know exactly how much you can save. Stay until the end, because I'll also tell you why this beats the other popular option most people recommend. Note, this information applies to US-based freelancers with self-employment income. Welcome to the Freelancers Wealth Blueprint, where we turn complex financial concepts into clear action steps for freelancers and gig workers. If you're new here, consider subscribing. We drop new videos every week to help you build wealth on your own terms. All right, let's get into it. The account I'm talking about is called a solo 401k, also known as an individual 401k. And it's specifically designed for self-employed people with no employees other than yourself and possibly your spouse. Now, you might have heard of the SEP IRA. That's the other retirement account people recommend for freelancers. But here's the thing most people don't tell you. The solo 401k lets you save almost double what a SEP IRA allows at the same income level. Let me show you exactly why. Both accounts let you invest in stocks, bonds, mutual funds, ETFs. Pretty much anything you'd find in a normal retirement account. And both give you the same tax advantages. Your contributions are tax deductible, and your investments grow tax-free until you withdraw them in retirement. But the contribution limits are completely different. With a SEP IRA, you can contribute up to 25% of your net self-employment income with a maximum of $72,000 in 2026. But here's the catch. You can only contribute as the employer. There's no employee contribution. With a solo 401k, you get to contribute as both the employee and the employer. As an employee, you can contribute up to $4,500 in 2026, or $3,200 if you're 50 or older. Then on top of that, you can add an employer contribution of up to 25% of your net self-employment income. The total maximum is the same $72,000, but you can hit that ceiling at a much lower income level. Let me run the calculator for you with a real example. Say you're a freelance graphic designer making $80,000 per year in net self-employment income. With a SEP IRA, your maximum contribution is 25% of $80,000, which equals $20,000. With a solo 401k, you can contribute $4,500 as the employee plus roughly $14,800 as the employer. That's 25% of your adjusted income after the self-employment tax deduction. Your total? About $39,300. That's nearly double what you could put away with a SEP IRA at the same income level. And here's where the tax savings get real. If you're in the 24% tax bracket, that extra $19,300 in contributions saves you over $4,600 in federal taxes. Every single year. Over a 20-year career, that's almost $100,000 in tax savings alone, not counting the investment growth. Now, if you're making $300,000 or more, both accounts max out at $72,000, so the difference disappears. But for most freelancers earning between $50,000 and $200,000, the solo 401k lets you save significantly more. Here's another big advantage that doesn't get talked about enough. The Roth option. A SEP IRA is always traditional. That means you get a tax deduction now, but you pay taxes when you withdraw in retirement. A solo 401k can include a Roth component. With Roth contributions, you pay taxes now, but your withdrawals in retirement are completely tax-free, including all your investment gains. If you believe tax rates will be higher in the future, or if you're currently in a lower tax bracket than you expect to be in retirement, the Roth option is incredibly valuable. For example, if you're a freelancer just starting out, making $60,000 a year, you might be in the 22% tax bracket. But if you build a successful business and retire with significant assets, you could be in a higher bracket later. Paying 22% now to avoid paying 32 or 35% later is a smart move. Only the solo 401k gives you this flexibility. Here's something else most people don't consider. What if you need access to your money before retirement? With a SEP IRA, if you withdraw before age 59 and a half, you'll pay income taxes, plus a 10% penalty. There's no loan option. With a solo 401k, you can actually borrow from your account, up to $50,000 or 50% of your balance, whichever is less. You pay the interest back to yourself, and as long as you repay within 5 years, there's no penalty. For freelancers with variable income, having this safety net can be a game changer. It's not ideal to tap your retirement savings, but it's better than going into credit card debt or missing a major opportunity. Now, I have to be honest about the one downside of the solo 401k. A SEP IRA takes about 15 minutes to set up. You can do it online at Fidelity, Schwab, or Vanguard for free. There's no annual paperwork, no filing requirements, nothing. A solo 401k is a bit more involved. Setup is still free at most brokerages, but once your account balance exceeds $250,000, you need to file Form 5500 EZs with the IRS each year. It's not complicated, but it is an extra step. If you value simplicity above all else, and you don't need to maximize contributions, the SEP IRA might be the right choice. So let me give you the quick decision framework. Choose the solo 401k if you want to maximize retirement savings at income under $200,000. If you want the Roth option for tax-free growth. If you might need the ability to take a loan. Or if you're willing to handle slightly more paperwork. Choose the SEP IRA if you make over $250,000 and want maximum simplicity. If you're just starting out and want the easiest possible setup. Or if you have employees, since SEP is easier to administer for small teams. For most freelancers watching this video, the solo 401k is the better choice. The extra contribution room alone can mean hundreds of thousands of extra dollars by the time you retire. That's the breakdown. If you found this helpful, hit that subscribe button. We've got a lot more content coming on taxes, investing, and building wealth as a freelancer. And remember, this is educational content, not financial advice. Your situation is unique, so consider talking to a tax professional before making big decisions. I'll see you in the next one.